right, we'll get started in a few minutes. Just looking at my other screen here. What have we got going on? Let everybody join. Welcome, everyone. We will get rolling at 6 o'clock UK time, so in about 2 minutes or so. Welcome, everybody. Okay, I'm looking at my other screen here. What's going on today? Yeah, I've been watching the NASDAQ ping pong back and forth around the VWAP. Funnily enough, we'll be talking about the VWAP today. And what an apt day to be a VWAP trader. We'll discuss that later on. Crude off quite heavily. GME, what a load of spice going on with GameStop. That'll be interesting to see how that one plays out. Fun and games. A man with a Twitter account and a meme can move the market. E-Trader not happy. Yeah, it'll be interesting to see how that plays out. Coinbase rocketing up 5%. Bitcoin over 70,000 again. What else we got on the old blotter? Oh, copper down 3%, off 3%. Coffee just starting to go. I don't know why got these bizarre. Well, copper because that was rallying aggressively. And coffee just got my eye on it. Just got a feeling about that. I'm not sure what's going to happen with it. Just keep my eye on that. Tesla just sitting there doing nothing. Jam between that 174 level on the floor. Nvidia still bid. Yeah, it's wild, isn't it? It's of course we've got NFP coming on Friday. So, but we always seem to be waiting for something. If we're not waiting for an inflation number, we're waiting for the Fed. If we're not waiting for the Fed, we're waiting for payroll jobs number, waiting for this, waiting for that. So, yeah, lots going on. And someone asked me actually about summer trading. And I think this year we could be in for a bit of spice. Now, I started trading 2001, 2003, probably, I guess. And summers used to be quiet, right? You could just, like clockwork, say July and August tended to be quiet because there was nothing going on. A lot of the governments were kind of off on holiday. The decision makers were off on holiday. Things weren't happening. But recently, things have been spicy. And of course, we've got the presidential election coming up at the end of the year. That's going to start heating up. We've got the UK general election, although no one apart from the UK cares about the general election. The Dow will not be, the S&P, the Dow, the Nasdaq will not be affected, whoever gets in the UK. But there's stuff going on, right? And of course, we're in a bit of a cycle, a bit of a turning point potentially for interest rates. So I think there's lots going on. So I think that there'll be some volatility. I do think that if you need to take time off, the best time to take it off is around that sort of period. But I still think it's going to be action. All right, let's get started, ladies and gents. Everyone is in here, I think. Hopefully you can all hear me good. How this normally works, if you are new here, I will talk, I will share experiences, I will share some things that I hope you will find valuable. If you'd like to ask a question, there's a Q&A section somewhere down there. I'm sure you can figure it out. Most of you are tech savvy enough. If you're traders, you definitely are. I'll put your question in there and I will get to it at the end. And I will hopefully give you the answer that you need. If I can't, I will definitely direct you to somewhere or someone who can. So you'll definitely get some help somewhere. Okay, so let's just do the usual risk disclaimer. Of course, if you're trading any leveraged instrument or trading at all in general, especially if you're trading a spread bet or CFD product, understand that there is a big risk of losing your money. That's what happens when you're trading with margin, with trading leverage. You've got potential to make lots, but you've got also potential to lose lots. Just understand the game you're playing, right? And just understand that this is very, very challenging, very, very tricky. But if you know what you're getting yourself into, then great. You're a big boy, you're a big girl, you understand the rules of the game, and that's why we play it. But if you don't understand, then just take a little bit of time to understand the risks that are involved with this sort of stuff, because it isn't for everyone. I know it says all the time, sometimes we get a bit blind to it with these risk disclaimers, but it's not for everybody. But if it's for you, then welcome. We're going to share some interesting stuff today. If it's not, that's okay. Go and find something else more interesting, maybe. Okay, so Q&A's are working. I'll get to that at the end, Charles. Thanks for your question. Right, let's get fired. Let's go straight away. Trading with the VWAP. Okay. I like the VWAP. I'm going to be fired up on this one. And you might catch me running off onto various rabbit holes as things come into my mind. And I've been working on different VWAP strategies. Just today, I'm kind of churning away, thinking about different ways to use VWAP in markets that I don't really trade much and kind of getting those sorted out. So I'm going to share loads of stuff with you today. Please, if you have a question, feel free to fire one at me. if it does, no question is a stupid question. Unless you ask me what is VWAP, I'm going to tell you what that is in a moment. Really, what I think I want to do today is this. I was thinking, you know what I'm going to do today? I think there's going to be two people who listen to this. You're going to be in one of these two camps. One is like, you've heard of VWAP, you don't really know what it is. And I think I might convert you into a VWAP aficionado today. Or you might be, hey, I understand VWAP, I know VWAP, I use VWAP, but maybe I can get some new insights. And I'm hopefully going to give something to each of you, whichever camp you're in today. Okay, Bill Ackman quote here. You know, I like to do quotes if you're regular here. By the way, if you're regular here, thanks for showing up again. Appreciate you coming live. It's always nice when I know that someone's on the other end of the screen. Makes it a little bit more interesting. And if you are new here, you're very welcome as well. We do these webinars thanks to Pepperstone, and this is why we're so fortunate to be able to do these webinars. Thanks to Pepperstone, partnership with them, able to do these webinars for you at no charge. We don't do them once every couple of weeks or so. Different topics, different themes, something that hopefully will just spark an idea in your mind, help you move forward. Is it going to be a strategy? Is it going to be a way of thinking, a way of operating, some sort of methodology, some sort of mindset thing, anything to do with short-term trading? If you're an active trader, my job is to hopefully share something with you that will improve your trading or help you improve your trading. I'm not giving you any promises. There's going to be some silver bullet or some sort of holy grail. Doesn't exist, sadly. But hopefully just this accumulation of kind of learning little bits that you can apply to your trading or not means that you kind of go away a better trader. Okay, so I've got a quote here from Bill Ackman. I like this quote. Experience is making mistakes and learning from them. Pretty simple, but that really is trading. Okay, let's get on with it, guys. Reminder, I'll share with you today ideas, thoughts. Please do your own research and stuff, analysis. Anything I share here is just, it's not advice. It's just me as a trader for 20 odd years, just sharing things that I think are going to be valuable to you. You can discard it. You can use it as an idea to go and learn some more, or you can do what you want with it. But please don't take it as gospel. I don't have all the answers. I'll try and help you as much as I can. But that's something to consider. Things take time. If you're going to make changes, you're going to adjust your strategy. The number one killer of traders is patience. You're not having the patience to say, right, it's a new strategy, a new way of trading, or an additional strategy running in parallel. Let me stick with it for a bit. I think so many traders, I've been there, I've been guilty of this. You get fired up. You go, yeah, I'm going to do this. I'm going to do that. You write it all down. You're writing your blotter. And then you start to trade it and it doesn't work for a couple of trades. You go, just discard it. If you like the idea and you want to you want to develop that strategy a bit more, you want to look into it a bit more, bring it into your trading, then just take some time. Say, hey, I'm going to make this change, stick to it, observe the results, then make some course corrections. Okay, so today we're going to talk about VWAP: who, why, what, when, where, how. I didn't there. The first KISS trading strategy, the VWAP Magnet, the Anchored VWAP, and some tips and ideas on how I think you can best use the VWAP, or how I like to use the VWAP, and you can kind of say yeah or nay to some of those things. All right, so first of all, I won't take long on this, promise you. What is VWAP? So VWAP is a volume weighted average price. And it's different from moving average, which is just price. So if you think about a moving average, let's use a simple, for example, that's just the mean, right? It's just an average. If you've got 10, 11, 12, 13, 14, then the average is going to be 12, right? It's just that this is that average. It doesn't take into account, should I say, any volume whatsoever. It is just the price. And you know this because you put an SMA into a chart, 5 period, 10 period, 2200, whatever it is. You know that the longer the period, the more data it's taking in, the smoother it is, sort of slower it is. It's just more of a better way of describing it. It catches up to price if price is running an uptrend. Volume weighted average price is slightly different because it's weighted by volume. So if you had the same thing, you had a 10 print, 11 print, 12, 13, 14 print, you had 100 times the volume on that 14 print, the VWAP's probably going to be trading at 14. It's just going to be weighted to where the volume is. So why is that interesting? Well, that's where all the transactions are taking place, right? If you've got volume and volume trading taking place at a specific price, that's where most of the participants are interested in. So you get these erroneous spikes that maybe trade a couple of lots up at highs and then swing back down again. The VWAP's unaffected, whereas a moving average would be affected by that. So I think it gives you more of an accurate insight into what's going on. But that's not just why we want to look at VWAP. We want to look at VWAP because it's used as an institutional benchmark. So I want to show you some stuff. I've done some digging. I wanted to kind of prove my my statement here that VWAP is used as an institutional benchmark. And this is stuff that I found on Google. I'm not kind of taking screenshots or anything of these people's websites, but quotes are fine. And I've got UBS, found something on UBS reference to VWAP, IB, Goldman. And these were algos that basically these banks and institutions had. So UBS, the objective of the UBS VWAP algo is to target the VWAP benchmark between the specified start and end time. And then right down to Goldman Sachs one, VWAP weights execution over a specified window using a proprietary GS estimate of the intraday liquidity profile. Sounds very complicated. Right. Whatever we think of that, we know that institutions are looking at VWAP. VWAP is considered a benchmark, right? Traders will try to beat the VWAP over the trading day. Now, some of these are sort of referencing taking a couple of hours in the trading day, but if you say you've got a big order to do at the opening bell, we're talking about the stock, like the New York Stock Exchange, for example, or anywhere where you've got that specific open and close, and it is valid as well for the FX markets to a certain extent. We'll talk about that in a bit. There's some little nuances there about volume and the centralized exchange and stuff. But if you imagine a big order being done from the start of the day to the end of the day, it's going to be split up over the trading day. And so algos and discretionary traders who are working orders are looking at the VWAP as value. And that's the thesis I make. It's like, okay, I know that they're not, it doesn't say UBS 10 period moving average there. It doesn't say the Goldman Sachs 50 period moving average. It says VWAP. There's a commonality that all these people are looking at VWAP, and we can argue about the nuances. And yes, there's still subtleties here that might not be 100% true, but what is true is that it is valuable, right? It's something that people are looking at, especially the intraday one. And you might say, yeah, but some of them are saying we can have these certain times of a day and what have you. But yeah, but everyone knows when the opening bell is, everyone knows when the closing bell is. So that VWAP or the intraday VWAP is set, it's fixed, it's something that a lot of participants are looking at. So for me, and probably for you as an active short-term trader, if other participants are looking at something, I want to be looking at it too. Why? Well, we'll get to that in a moment, but perhaps I don't want to follow what they're doing, but I also want to know what reference point they're looking at price from. So what's the anchor they're looking at price? And if everyone's got VWAP on and price is way above the VWAP, I know they can see that. I know they can see prices way above VWAP. I'm getting ahead of myself, but hopefully this makes sense as to why I consider VWAP to be a really, really good thing to have on your chart. And there's one more thing here, which is great. This is like the most trader lingo thing ever. Goldman says block strike adds opportunistic dark posting behavior to seek block executions, blah, blah, blah. Anyway, VWAP is mentioned there as well. And also TWAP. Maybe we'll talk about TWAP another time. But VWAP for now. Okay, so back into the retail trading world. So we've got some evidence, right? We've got some evidence that VWAP is used by a lot of traders, a lot of algos. So how can we use that to our advantage? Simple. We watch price behavior away from and near to the VWAP. So let's explain. Price plus VWAP, does that equal edge? I believe so. Maybe you will too after watching this. If price has been away from the VWAP, I've got loads of charts, by the way, loads of chart examples coming up. So if you can't visualize this, don't worry. But I want to explain it, and then I'll kind of show you some chart examples in a moment. Some ones that worked out, some ones that didn't, some ones that are dirty, some that are clean, all this type of stuff. Price has been away from the VWAP for a long period and comes back. VWAP is considered good value. If you think about this, if you're a buyer and you're trying to beat VWAP or you're trying to get a VWAP, if you've been slicing your order up throughout the day, you're probably going to be on VWAP, the price. That's price. Imagine a chart, and we'll have one up in a moment. Price is rallying, VWAP's coming up alongside it. There's a big gap there. If price comes back to the VWAP, that is going to be good value, right? It's been away from the VWAP. And if you're being benchmarked on how close you can get to VWAP, are you going to start buying more when price comes back and touches that VWAP? You probably are. You're like, hey, this is much better value now. I'm going to look good over the trading day. If I'm getting more and more, if I get more aggressive in my orders as prices coming to the VWAP, then the average price that I have to report is going to be way better and way closer to VWAP, and I might end up even beating VWAP, as opposed to price being well away from VWAP and having to pay up. That's why I believe we only get trend days every now and then, because that's a different scenario, right? So reprice scenario, something else is going on. VWAP is almost an irrelevance at that point in time. A lot of times we're coming back and we're oscillating around VWAP, or we're jumping off VWAP because we have that kind of more uniform buying, if you like. And we often see a bounce on the first touch. Okay, so let's go straight to this. So I call this a VWAP first kiss. And the strategy idea is, and you might have heard of this before, and this is maybe the simplest version of trading VWAP. This is more of a what I call an inside-out trade. So you're coming back and then you're bouncing off, almost like a moving average bounce, right? Simple stuff. We'll talk about this. We'll talk about some. I'll give some examples in a moment. In a moment, we'll talk about oscillating around VWAP and the VWAP magnet. A little bit more advanced, a bit more mean reversion, but same type of thing using VWAP as that anchor point. So what's the strategy idea? The price rallies away from that volume weighted average price for several hours. On the first touch of the VWAP, as price comes back into it, and I say preferably during lunchtime, maybe I'm overcomplicating things here, but for me, when I'm coming up with the strategy, I want to see, I'm not fading a big V-shaped reversal in the last hour or something that's based on news. And we're talking about the trading NASDAQ, or if you're trading S&P 500 or Dow, something like that. I don't want to start fading VWAP in the final half an hour. That's obviously some sort of urgency going on. But if we're coming down to the lunchtime period, then my inclination is that we might find some support the VWAP. Stops. We'll talk about stops a little bit more detail in a moment, but generally under the last swing low, if we're talking about a push to the downside, some great examples in a moment, so they all become clear. Or a percentage of ATR. I'm a big fan of using a percentage of ATR, make it nice and simple. What's your daily expected range? What's your ADR of the day, or an ATR function? In other words, what are you expecting the range to be? $400, $300, $2, $100. What is it? Use that based on a daily chart. I've done a webinar and I've gone into detail about that before, and use that as a sort of point to say a point of reference for your stop, and say 30% of the expected range will be my stop, 20%, etc. Good place to start with stop losses if you're struggling to come up with a strategy or come up with a reasonable way of defining stops. I know most people say put it under swing lows, and that's fine. But if you find yourself, I'm going off piste here, I appreciate that. But if you find yourself getting stopped out regularly, one quick, easy fix is to go, well, hang on, let me have no discretion over it. Let me use a percentage of ATR. Let me put my stop in there. And then when the trade gets in the cruise, I call it, then I can manage to stop accordingly. So something to consider. Target, prior high in the case of an uptrend, or a fixed move. Fixed move being a function of ATR. Okay, so a couple of recent examples. I've used SPY here just because I just wanted to get two of the regular trading hour sessions in there. If you were trading the CFD product, if you were trading, the US 500, I think Pepperstone calls it a CFD product, it would look different on your chart, 24 hours. The VWAP starts to look very similar to the regular trading hours ETF as volume starts to come through. But you see the concept here, prices traded away from the VWAP for several hours, come back, probably didn't get a filled on that, but it is a recent example, wanting to include it. SPY's trade again. It's interesting. We had two opposite days here. SPY trade away from the VWAP to the downside, came back and tagged it. Let's talk about entries in a moment. I'm going to show you some visual examples. One that didn't work on Euro USD. Price trade away from the VWAP for several hours in the morning for pulling back, bounced off it. But if you were going to use a stop that was kind of above that swing high, or a fixed stop, a percentage of an ATR, you'd be stopped on that trade. But you can see how VWAP is really kind of support there, resistance there, resistance there. It's kind of held stuff in. Another one here on Euro USD again. Good multi-hour rally in the morning above VWAP, coming down to VWAP after the UK Open, finds a little bit of support, goes through. We'll talk about entries and kind of how to fine-tune these a little bit better in a moment. And that came back up and tagged that prior high. Another one here, Euro US dollar again, drive lower, push back up, and just tag of that VWAP, roll back over. Yeah. Now, one comment about volume here is, obviously, if you're trading an instrument like Tesla, if you're trading an instrument like the S&P 500 or SPY, if you're trading any instrument that's got a centralized exchange, the volume is going to be the volume. It's going to be clear. It's going to be, hey, that's the only place you can trade that, unless you're trading a synthetic product like the CFD product, etc. But anything, if you're using TradingView, is going to have a genuine volume from the exchange. Now, if you're trading an FX, a Forex instrument, regardless of what you're trading, there is no centralized exchange for FX. That's just the way it works. And so volume is a little bit of a guesswork. I found that if I'm using TradingView, and I'm not saying this just because we're doing this in conjunction with Pepperstone, I found their volume to be way more effective than any of the others. There's other feeds on there, and to be fair, it doesn't matter what feed you use. There's no advantage to using that. But I just think that the way that I some of the algos that I've kind of coded up and some of the strategies that I've been looking at, the volume seems much more reliable on Pepperstone. Obviously, go and check out for yourself. There's so many different feeds out there. You type in Euro USD on TradingView and you've got 5 or 6 there. But don't remember that it's not a centralized exchange. So it's a little bit of guesswork as well. The volume's a little bit different. But having looked at all the others on there, genuinely, I think Pepperstone's the better volume one. And I'm honestly not just saying that because we're doing this with them, but I think it's a good one. Okay, so it's the rotation away, it's the pullback, it's the test, and it's the roll back over. Several hours away from the VWAP, comes back up. That's considered value, and then we push back lower. So you're short. You're taking a short entry, rolling back over. Your target is the prior low or prior high, depending on what you're doing here. We'll talk about entries in a moment. This kind of went through a little bit like butter and then roll back up. It's not always going to be perfect, but many times it is. And you go and look at your own chart and go and look at your own stuff that you trade, stick your VWAP on, which is very easy to do on TradingView, and see for yourself how often price will really respect that VWAP, especially on days where it's kind of multiple hours away, come back, tags it, rolls back over. It's frustrating. We don't quite get the tag. It is frustrating, but that's trading. You're not always going to get it. Sometimes you're going to get stopped. Sometimes you're going to get a perfect entry. Sometimes it's going to reverse right when you take it. Sometimes it'll come through. That's the nature of the beast, right? Real world stuff, guys. Okay, so thinking about it, price moves away. Far away, sellers are backing off. When price is moving back towards, sellers are stepping back in. If you think about that from a kind of logical perspective, sellers are stepping into this euro, selling. They back off a bit because it's like, oh, and it's quite a big move. We don't want to kind of push our luck. There's no real news, not a big trend day. Starts to rotate back to the VWAP. All of a sudden, sellers feel, hey, this is value again. If we can sell it, the VWAP is 1.0845. Great, we're getting some good value here. So that's the thinking behind it. Thinking is the move away from the VWAP. It's away from so-called value, rolls back towards the VWAP. All of a sudden, that's perceived as value. The selling suddenly starts to get a little bit more aggressive. The buying shuts off because from a buyer's perspective as well, it's value away from the VWAP. You're beating the VWAP, and regardless of what other reason you're buying for, any other speculation reason or hedging requirement, you're beating the VWAP. Then as it starts to come back up, you're not getting anything better than the sort of industry standard of value, if you like. So it's just thinking in those sort of terms. Extension away from the VWAP, first kiss back is always is often a good place to consider an entry back in the direction of the trend. Okay, so some extra notes on this. Would for time? Yes, okay. I prefer to take the cross back over the VWAP in the direction of the trade as a trigger. What a mouthful. I wrote that. I obviously didn't read it. Okay, what I'm trying to say here is this. As price goes through, I've got a little example here actually. As price goes through the VWAP, I'm not touching it. I'm not interested. If I'm looking for the short, by the way, so I'm looking to short this as it comes back up to the VWAP. There's your VWAP, the blue line, comes back up. I'm not looking to stab at that straight away. I want to see it go up through it and then come back down through. So in this example here, there would be my short entry. And if we're talking about the stops above the swing highs, your stop would be above that high there. If it's a fixed ATR stop, it would be whatever the average true range is, the average daily range of the Euro USD is, the time you're taking the trade, a percentage of that. I hope that makes sense. And why is because, let me find the right slide, things like, where is she? There is. Things like this. If you're buying straight away on that first touch, sometimes it does kind of glide through. Now, of course, there's a payoff, right? As always in trading, there's a payoff. You might miss ones like this SPY one, because it didn't really go through. It kind of just touched it. And if you had a resting order in, great. If you were there, great. If you're waiting for it to go through and come back, you probably missed it, right? So you've got to weigh up how you want to play this. But personally, but more often than not, we sometimes get a little drift through, and then by being able to do this means that you can structure the trade a little bit more effectively with your stop, and you kind of let the sellers in this case start to accumulate. They start to accumulate. So that's just something to look at. I only want to take the first kiss of the VWAP. So in this tiny example I've got here, everyone's squinting out to look at. The first touch is what I'm looking for. So multiple hours away, the first touch. I wouldn't take this anywhere actually, 'cause it's the middle of the morning, but just an example, afterwards it becomes less and less likely to hold. Sometimes you get days, honestly, where it's hugging that VWAP. It is, you'll see them just acting like a roof, just sitting there, or it's acting like a floor. But to me, it's the first touch. After that, it's a different type of trade. We'll talk about how to combine it again with triggers in a moment, but I want to move on to the VWAP Magnet. This one I think will excite you. So we talked about extensions away from the VWAP, coming back to perceived value. And by the way, that's just our thesis, right? If we're short-term traders, we've got to have a thesis. We've got to have an idea. And our idea is we believe that VWAP is considered as some sort of agreed upon intraday value. That's the thesis, true or not. Prices come away. It's as good a place as any to buy a retracement back to for an expectation for a bounce off. That's the thesis. To me, it makes sense. In the right conditions, it's great. In the wrong conditions, like everything, context is key. But we flip it on its head now, and you're like, all right, Mark, well, you just told us that we want to buy extensions back to the VWAP. Well, what we're doing here is we're calibrating to context. So back here, the context is we've moved away from the VWAP. No, I'm not initiating a trade at all. No trade. If you want to do a separate trade strategy, fine. But for this strategy, for this setup, it doesn't matter. We're waiting for it to move away from the VWAP. Okay, tick. There's our trade context. Price has moved away from the VWAP. We're not in a rotational environment at all. We're in a price extension environment, a price discovery environment. Then we come back to the VWAP. Now we can potentially initiate the trade. Right. However, some days we get days where we're just oscillating around the VWAP. So we're not trying to be clever and predict here. Not saying, oh, you can predict this. We're looking at the evidence and then we're adjusting our VWAP strategy accordingly. Show you some chart examples in a moment. Price has been in a fairly quiet range, oscillating around the VWAP. It's touched the VWAP many times a day for the VWAP Magnet trade, different from, I'm going to stop scrolling back, I promise you, different from the excursion away. Hopefully that makes sense. I'm pretty sure it does. Now, we are now looking for extensions away from the VWAP to come back in. So we're trading an A to B trade, extensions away, come back in to tag the VWAP. So it's a completely different trade from this continuation type trade from the VWAP first kiss. This is a VWAP Magnet. And you might be saying, yeah, Mark, how do we know the difference? That's important. The context of what price has done before is giving us indication as to what we're going to trade and how we're going to trade it. Okay, some examples. Let's have a look. And by the way, this is an A to B trade, as I call it. You are selling at highs, you're buying back at VWAP. You're buying at lows, you're selling back at VWAP. You're trading that way. Now, the next obvious question is, Mark, that sounds all very well and good, but how do we time these mean reversion plays? How do we know where the swing high is? How do we know where the swing low is? Are you going to give us a crystal ball? Unfortunately, I'm not, but this is how we guide ourselves with this. Rotational type day, we start to measure. I didn't mean to do that. Where am I now? Go back. There we go. Yes. Rotational type day, check. So we're not guessing. We're looking at price action to tell us the type of day we're in. Are we in a range extension day? Are we in a price discovery day? Or are we just oscillating around the VWAP? It's telling us. We don't have to guess. We don't have to second guess this. That's what it is. Right. Day type. Okay. Now what? Now we start to look at the distance away from the VWAP as a guide for our A to B trades. So VWAP should be relatively flat. If you look, I'm not going to scroll back. If you look at those trending type days, VWAP has got an angle to it. A flat VWAP, price is rotating around the VWAP. Okay, check, check, check. Next stage is we start to measure the distance from the VWAP to the extremes, to the swing highs, to the swing lows. And then we say, right, okay, that is a reference point for where I might look to initiate a counter trend trade for the rest of the day. So we're calibrating ourselves to conditions. This is why it's such a beautiful trade setup. You're calibrating yourself to conditions and you're saying, right, and let me give you an example. On this little tool here, I'll show you how to get this in a moment. But this is distance from VWAP. You don't need this, by the way. You can just measure, use some sort of measuring tool, whatever charting package you've got. Just measure from the VWAP to the high, from the VWAP to the high. And this is just doing this in a kind of a histogram way for easy visuals. So I've already seen, look, this is kind of keeping in range of between naught. It's going, by the way, this is positive up here, it's negative here. So about 25 pips away, got 30 pips away here, 25. So I'm starting to draw a line here, and I'm saying, okay, we've been rotating, around the VWAP to the low side. The VWAP is relatively flat. Okay, so any extensions away that kind of go that sort of distance away, 25 pips, maybe 30 pips, I will look to fade them. And for me, you can adjust this to suit you. This is a one-to-one play. So this is not going to knock anything out the park. It's not a huge risk-reward ratio trade, unless, of course, we're structuring as part of a multi-day play or a multi-hour play and using this as a lever to get in. That's fine. But to me, traditionally, A to B trade, one-to-one type trade, you're just taking kind of, I believe it's got a higher probability of success than others, and that's how the maths works out. So you're fading this, and you're kind of just structuring this. You're saying, right, 25 pips above the zero line, 25 pips below, and I can say, don't need this. I'll show you how to get it in a moment, but you can measure it and go, right, well, I'm going to start short at 25 above because that's where we've faded before. We haven't gone above that. Okay, so I'm starting to short here. I've got a fixed stop. It's not going to be tagged. Come back, I'm closing at VWAP. 25 below, I'm used to using the same extension, expecting the symmetry to be there. 25 below, pop back to the VWAP. 25 above, about here, goes a little bit further, doesn't go anywhere near as much as to stop you out, rolls back over, and you're taking your profit back at VWAP. Same again, etc., etc. Here's data or open or something that changes the dynamic of the price action. No more trading. Done. You're done. The idea of this is just to get into the noise. Chung, chung, chung. And the idea, again, if we think about going back to what a VWAP means, if we believe that it's perceived as true value for price, when price gets too far away from it, buyers are thinking, yeah, man, I'm not buying that anymore. The algos aren't getting aggressive anymore. Sellers are now thinking it's reasonable value, and they're coming back and it's rotating back. Especially, again, I'm repeating myself, but it's important. The context of the day is rotational, back and forth, flat VWAP. No one's that interested. Any extensions to be sold, any extensions to the downside to be bought. That's the kind of way we're structuring stuff. Another example here. What was this one? CAD, USD CAD. So this is a little bit nicer, actually, because I don't think you'd have taken this because you're sort of calibrating yourself to conditions. But below the VWAP, above the VWAP, rotating around reasonably flat. Okay, now we're starting to draw our lines. We're saying, okay, that's about, and we just draw the distance between the VWAP and the high. Okay, I'm looking to fade kind of moves up there. And we didn't quite get one here, but maybe he would have taken that. Okay, yes, that's interesting, short, great. And then I'm extrapolating it down to the downside. There's my fade. There's my fade. And by the way, your exit is the VWAP. You're not looking for extension. I guess you could. But traditionally speaking, I think it's an A to B trade, i.e. from here to the VWAP, from here to the VWAP, from here to the VWAP. That's a better way of playing it. And the symmetry is remarkable. The symmetry sometimes is remarkable. And again, I know that many people who should be kind of questioning everything about trading. Absolutely, because that's how we get better. But the context gives you the ability to calibrate to the trading day. US Open, we don't want to trade it anymore. Another example here, same type of thing, ping-ponging back and forth. And very often it's a decent resistance level as well. Another one here is today, funnily enough, today. I thought, yeah, I was looking at and messing around with stuff, and I thought, oh yeah, brilliant, good example. And it shows I'm not just picking stuff from 1982 and giving you a chart pattern. This happened today. Extensions away from the VWAP. I got it set at around 39 on the Pepperstone's NASDAQ product. And you can see tagged here, back to the VWAP, tagged here, back to the VWAP. And actually, just before I came online, we had exactly the same pattern. We moved up to the high, and we were trading up at, just before I came along, about 10 to 6. We were trading up at 8,600. So here, which was exactly the high of the $39 away from the VWAP, and we rotated back to the VWAP, and we're just coming back up to it now. So, this stuff is valuable. Flat VWAP, rotational market. You're framing the high away from the VWAP, the extension away from the VWAP. You're framing the extension below the VWAP. This is good if you're a trader who likes to trade this kind of way. Little scalps, jobbing around some positions, A to B trades, not looking for home runs, just looking to kind of keep yourself out of trouble. Maybe you're waiting for a bigger move, but you're not diving. You're saying, hey, listen, I'm only going to trade this when I get this extension. Right? When I get an extension that I feel like it's likely to turn, then I'll take that. And if I'm getting one-to-ones, yeah, most people say, "Oh, I'll never take one-to-ones." That's fine. That's absolutely fine. But it's just this kind of, you're just calibrating to the conditions. And by the way, if you want the code for distance from VWAP for TradingView, I warn you, it's very complicated. That's it. It's just, if you've got TradingView, it's just plot bracket close minus VWAP. That is it. And that gives you, you don't need it, but that gives you that little visual representation converted to a histogram, distance from the VWAPs. Then you can kind of draw your lines, you calibrate to conditions, and then you say, right, and here's something else to add to that. You say to yourself, okay, I will look for fade trades as we move away from the VWAP and to the level that I believe we could reverse at. But you might then add another layer in, like a candlestick reversal pattern, some sort of extension, some sort of exhaustion, maybe an engulfing, maybe, you know, a big wick or something extra. That's fine to add on that extra layer of edge. And then the distance from VWAP is guiding you as to when you might want to initiate that counter trend trade. So I hope that makes sense. And that's a very, very easy piece of code that. All right. So extra notes I've just mentioned about the combining candlestick pattern, engulfing, wide range bar, volume spike. Oh, and if you have the time of day that you expect reversals to for your market, then you're starting to really level up this pattern and this strategy. 6 o'clock shock. I'm going to share with link to that in a moment. Many of you, I've done a webinar. I talked about that pattern before. That is an extension away from the VWAP after 6 p.m. UK time, because a lot of reversals happen then, and combined with an ignition bar, taking it back to the VWAP. That actually has been pretty good. The last kind of couple of months, that's been holding its own. It's never going to be a miraculous strategy, that one, but it's a nice A to B type trade. I'll give you a link to that if you want to go and look at the recording of that. So where are we? Anchored VWAP. All right. So hopefully that makes sense. By the way, if you want to fire in stuff in the Q&A, please feel free to do that. I know I move quickly. I know I kind of go all over the place, but I love this stuff. This stuff is super, super valuable. It's good. And if I believe it's really good anyway. And if you focus on VWAP, I'm certain if you focus long enough on VWAP, even if you don't look at these strategies and go, I don't really like this, focusing on VWAP and saying, hey, I'm going to become a specialist in the VWAP for my market, I believe you'll find edge. I believe you'll find edge. Okay, so Anchored VWAP. So Anchored VWAP is it's a relatively new concept, actually. A guy called Brian Shannon, and I'll put a link to his book in it, or I'll put a screenshot of his book in a moment. But this is where you anchor your VWAP at a key event or date. So we go back to these ones here. I promise we won't go back to them too much, but these all start the trading day, right? This is the S&P 500, the SPY ETF. It starts at the beginning of the trading day. The bell goes off in my time, a UK time, 2:30, and goes to the end of the trading day, right? If it's a 24-hour product, it's going to trade throughout the 24-hour period. You can see how this is. And actually, you can see how it's going to be very similar in price to the S&P 500 ETF as we start to get going. So that all starts at the beginning of the trading day. We believe that is to be value as such. So go back, Anchored VWAP. So Anchored VWAP is when we say, okay, what's an important point in time? What's a point in time that everyone is looking at? Again, remember at the beginning, I said other participants. That's one of the keys to this game, is to say to yourself, who's my counterparty? Who's trapped? Who's not? Who's looking at what? Who cares about this? Who gives a you know what about that? That's what the game we're playing. We can get very caught up in looking at these pretty lines on charts and doing this and doing that. We're trading against somebody else on the other side of our trade. Now, of course, we're trading through a broker. Very often the broker's a counterparty, they're aggregating trades, etc. That's the details. But ultimately, you know, there's buyers, there's sellers, there's buyers, there's sellers. For price to print, you have to have two players. And I want to know, what are the players looking at? What do they care about? What's making them wince and what's making them cheer? Because that then indicates to me how I might want to position. All right, so Anchored VWAP. I know people care about a key event or date, i.e. earnings if we're looking at stocks, date first of the quarter, first of the month, first of the year. That's when a lot of institutions are benchmarking their success, right? They benchmark and they report how much they've made or lost per month. So a month is important to them. So if we can anchor the start of our VWAP calculation, and TradingView allows you to do it very easily. I think it's native in the platform. Other platforms will as well, I'm sure. You start your VWAP then. This is for kind of swing traders, by the way. Maybe I should have said that for swing traders. And then you wait for price to test that VWAP after that significant event. I'll show you some charts in a moment to make it a bit more clear. Taking the trade in the direction of the trend, or we look for a change of sentiment. So example, let's go to example. Examples are much better, right? I've anchored the VWAP on the 1st of April, right? First of the month. And look, that's my starting point. Now, VWAP is calculated from there. And I've got a 60-minute chart here of the Dow. You can see how price has kept VWAP has kept price pinned to the downside all throughout April. All throughout April, apart from this kind of little afternoon bit and early in the morning the next day, or mid or half the day, it basically the whole of the month was traded below there. So your strategy is either to say, use it as a VWAP kiss and go, hey, I want to get short on the first tag of that anchored VWAP. I'm anchoring the first of the month. I realize it's important. We've had 2 heavy down days in the first trading days of April, consolidation day, drift back up. Where's going to be a good place to maybe initiate a short if I believe we're going to continue to the downside? The anchored VWAP. And sure enough, it was there. Didn't quite make it this one. This one, you got a little bit of juice, but ultimately rolled over later on. Finally kept things pinned. And then then in May, we changed the tune a little bit. And then look at May, we shift now to S&P 500 because there's a lot of S&P 500 traders out there. Anchoring at the 1st of May, oscillating around. I can't remember, we're in May now. We've had all sorts of data and stuff, and we could be anything. CPI, Fed, you know what. Anyway, price has rallied well away from the anchored VWAP, and only just on the last trading day, we had that really crazy rally of the day. The last hour, it just went to the stratosphere. Look where it bounced off, the anchored VWAP. Could it be a coincidence? Maybe there's some element there. Maybe there's some support. Maybe there's other stuff that you can put in. But if you're aware of this anchored VWAP, that's considered value, right? It's value in the month. If you're a trader who's trying to position and build a position, the S&P 500 over the month for an institutional for whatever reason, right? Up here, you're chasing. Your VWAP's here. Look at the monthly VWAP and going, it's sitting at 5,200. Price is up at highs at 5,340. I'm paying up. Well, if I've got to do it, I've got to do it. But as it starts to roll back over, you can suddenly look like a hero and go, yeah, I've got the monthly VWAP. Oh, well done. Monthly VWAP was around 5,250. Where's your entry? 5,250, 5,300. So it's worth watching. It's worth watching. Tesla earnings, I started the anchored VWAP earnings because that's a change in the valuation potential of the company, right? Earnings comes out, we're earning this per share. This is the dividend or not in case of Tesla, blah, blah. Look at the anchored VWAP. Not very relevant on that trading day, although I bet you if you measured those extensions, talk about distance away from the VWAP, they look symmetrical to me. Rolled over and it basically kept price, acted like a floor for price all the way through until there. Here's one of the other way around, just to be fair to the bears out there. Shopify, anchor it on the earnings. Not a lot happening here. Probably a bit of symmetry with the distance away from VWAP. Just got absolutely battered, came back up, and it's acting as a resistance point. So it's worth looking at. I have to say, out of the 3, it's not my most favorite, and I will use it as a guide and a reference. I don't have a specific strategy that I'm deploying on the anchored VWAP. But I want to share it with you because I know that you might want to consider it and you might want to say, hey, this is useful for gauging sentiment. Or, as I mentioned initially, a shift in sentiment. If price then starts to go above the anchored VWAP after the earnings and starts to hold support, you might say, you know what? I might want to look long. I might want to take an ORB trade on to the upside on the next day. Or I might want to, you might slightly alter the way that you perceive that sentiment of the stock or the market, whatever it might be. So that's why I wanted to include it. This is the book that Brian Shannon wrote about the anchored VWAP and talked all about it on there. Check that out if you like that. Okay, further learning, and we'll get to Q&A. These are available on the Pepperstone YouTube channel, or if you go to my website, which is Traders Mastermind, all of the trading webinars I've done, the free trading webinars I've done with Pepperstone are linked there. More VWAP content. I've got in the 10 mean, I was just double checking this before I came on, in the 10 mean reversion trading strategies webinar. There is some content there about the VWAP extension setup. And I think that one I kind of actually laid it out and measured it rather than using that tool. So that might be valuable to you. You can skip to the part that you want to specifically, look at. And then in that webinar section, and by the way, you just go to free resources and click webinars to find this. 10 trend trading strategies. I talked about the VWAP strategy there, which is the kind of the first kiss type trade, long on the first test of VWAP. So if you want to go further and deeper into it, those are probably going to be valuable to you. You can find them on my website, or like I say, go to the Pepperstone YouTube channel. There are on there. Okay, so summary. VWAP, I believe, is a significant level watched by many. I think that's a good North Star to have. Watching price behavior near or away from VWAP. And remember, we're not guessing, I'm not crystal ball Mark here. We're calibrating to conditions. Always be suspicious. When someone's like, oh, we do this under, he's like, no, yeah, but how do I tell? How can I tell? Sometimes you have indications and clues it's going to be a trend type day or this type day. You can kind of have maybe it's got a little bit more chance, but this is different. We're not fading moves away from the VWAP when it's been driving away from the VWAP. That's not the game. The game is to buy the first kiss for a retracement back up. Same if it's oscillating around, we're not buying that VWAP for a move back up because it could rotate right through. We're just shifting the way we look at it based on the context of the market in front of us. Not trying to be clever, not trying to be smart, just saying this is what the market is. Do I want to trade it? Yes, I do. This is the roadmap I'm going to use to trade that. And that's the way that we like to look at stuff. Price been away from VWAP and shifts back. First kiss trade. Price stuck at VWAP, then extends. VWAP magnet, pulling it back, and anchoring your VWAP at key points. Okay, I'm going to get to questions. Thank you so much for your attention all the way through this. Many of you have come here from my daily email, but if you haven't and you're watching the recording of this, then I invite you to sign up and join this. I send an email out every day. I write these emails and we cover everything from strategies, from ideas to deep dives on specific traders to mindset to sometimes I'll share something interesting I've found from a trading perspective on the online, all sorts of stuff. If you're an active trader, you'll like this email. It's free, of course, and doesn't take very long to read, and I send out every day. That's that. Let me get to the Q&A. Yes. If you want to put questions in, please feel free, ladies and gents. Oh, I do love a bit of VWAP. We've had a bounce off it today. Actually, I'm looking at my other screen here. After we came on, we had that bounce back off it. Did it quite get up? Ooh, not quite the second push up, but you would have got that initial one. Okay. Getting distracted. Charles says, good evening. Do you use some indicators like the EMA together with the VWAP? No, I don't, Charles. You were very early with that question, weren't you, sir? Let me move you over here. There we go. No, I don't. Not for this specific strategy. EMA, I might use a 20 period on a first pullback after a big drive, and that's going to be much earlier trigger than the VWAP because the VWAP is going to be quite a deep retracement, and that's why I kind of look at it lunchtime rather than early in the day. Not to go off track here, but if you've got a big drive up and it comes back to the VWAP very, very early on, that's probably not a good sign. You want the VWAP to be embedded and really entrenched, like lots of volume done, lots of price done. That's why I kind of have that lunchtime window. So, short answer, no. What's the best settings for VWAP and the best time frame for those settings? It doesn't actually matter. The VWAP is a standard setting, right? As in the traditional VWAP is just VWAP. You can't change the settings on it. You can change what the actual price is. So the candle is, do you take the price as the close of that candle, the average of the candle, the high or the low? That makes very minimal difference. But it's just taking the volume and the price and adjusting it. There aren't really many settings you can change. And because of that, the VWAP will be the same or very, very similar. Some slight calculation differences on your 1 minute and your 15 and your 60. It will be the same. So it doesn't matter. The VWAP price will be very, very similar on whatever time frame chart you've got. Lower time frame, higher time frame. Obviously, in a daily, it's going to look a mess because it's meant to be as an intraday. Well, I say that the anchored VWAP will be different because it's a slightly different way it calculates. If you use additional VWAP, you don't want to use it on a daily because it messes up. Oh, this is a great question. This is a really good question, Mr. Anonymous or Mrs. Anonymous. Would the VWAP bands help with the VWAP A to B trade in terms of giving you an entry point? You could use those, but the only problem you have with the VWAP bands is that they are going to, they're not they vary depending on how the VWAP is moving, right? Yes, there are some VWAP bands. In fact, you absolutely can. You can calibrate those VWAP bands so that they are a fixed, I'm pretty sure you can, they're a fixed pips, dollars amount away from the VWAP. These aren't the standard deviation bands. These are fixed bands. So the standard deviation bands are slightly different. So let's forget about those. The fixed bands, yes. And so you'd wait for VWAP to be flat, and then you would calibrate those based on the context that we talked about before, and go at $25 below, below, $25 above, and use those. Absolutely. That's a really good point there. And they're on TradingView, but you can't, but don't use the standard deviation bands because they're going to adjust and expand and contract like a Bollinger Band does. But a fixed band, yeah, that's a really good way of doing it. Daniel said, great presentation, Mark, as always. Thank you, Daniel. Appreciate your feedback, pal. Just for your information, range days, I've been anchoring VWAP to high of day and low. Oh, okay. I'll read this before I suddenly go, ooh, you guys can't see this, I don't think. Right. Daniel's been anchoring his VWAP to the high of the day and low of the day to try and determine who might be in charge. That's a smart way of doing it, Daniel, and something I perhaps could have included. So Daniel's saying, hey, that's a key point that everyone's looking at. Remember, the North Star for the Anchored VWAP is what does everyone care about? Earnings date, start of the month, start of the week. For an intraday trader, what do people care about? The opening print. That's what the VWAP is based on. Daniel said, okay, I also know people care about the high and the low. How is price moving relative to those to give me an idea of who is in control? Is supply in control? Is demand in control? Who seems to be winning this game? I like that. Good stuff. Another anonymous attendee says, if I were to use the VWAP on the 1 minute chart for NAS, what would I use and inputs to calibrate the indicator for scalping? Okay. So if you were going to use if you liked the VWAP magnet type approach, you'd put your VWAP on, you start it off, and you just use the default VWAP on TradingView, whatever you're using, right? That's going to give you your volume weighted average price. You then wait for the price to not be extended away from the VWAP. You want it to be oscillating around the VWAP or just bouncing off it. But a flat VWAP is really the filter. Anything that's got an angle on it, you don't want to get involved in. Don't even try and be smart. And then you're saying to yourself, well, how far away from the VWAP have we gone in the morning? And then use that to determine when you would fade the VWAP in the afternoon, but don't go into the opening session or any time when the volume might change, like the opening bell for US or overnight session or anything like that. You just say, right, these are the conditions I've calibrated on and what you're saying is this: I expect the conditions to remain the same for the rest of the day. They won't always, which is why you must always use a stop, but as you see, you often get the same type of trading day from the morning through to the afternoon. And if you get a breakout in the afternoon, fine, you're going to take a stop loss. That's okay. But the idea and the thesis is that you're saying, okay, I'm just going to calibrate to those conditions. I'm going to fade extensions away that I've already seen have worked before. I'm going to buy extensions below that I've already seen have worked before. And keeping it simple, I'm not trying to overthink stuff. Because that's what we do as traders, isn't it? We overthink things and we go, oh, yeah, but this, that, and the other, and the Fed's doing this, and non-farm payroll. We're just saying, listen, we're going super simple, low IQ approach of this is what's happened. I'm going to expect this to happen when nothing else changes dramatically, and let me play that game. That's the VWAP magnet trade, really. Hope that's answered your question, Anonymous. Robert reads, how far into a cash session will you start to use the VWAP as a trading strategy guide? Another great question. One I should. You guys are picking holes in my stuff that I know I should have been mentioning, and I'm glad you're here to ask these questions. Yeah, great question, Robert. So Robert's saying, okay, in the cash session, the VWAP's going, it's rolling. At the beginning of the session, it's less reliable because it's got less information to go on, right? If you're starting at 2:30 UK time, 9:30 Eastern time, at half an hour in, it's only got half an hour's worth of trade. I think you've got to give it an hour, at least an hour, if not 90 minutes, Robert, and say, okay, that's probably enough to get a feel for it. And the other thing is if the 24-hour VWAP is a similar position, I will look at the 24-hour, and then as the regular trading hours takes over, I'll start to use that as more interesting. That's more valuable. So 24 hours is taking obviously all the trade that we've done overnight. Then as the bell goes, I'll start to then kind of go, well, this is now becoming more meaningful. Let me dump the 24-hour. So I'd say about an hour, 90 minutes or so, Robert. But use your discretion on that. Vinitz says, what time frame, 1 minute, 2 minute, 5 minute in brackets, is best for using VWAP for first kiss? I've noticed 1 minute and 2 minute VWAP could be wrong signal. Vinit, it won't matter. It won't matter because the VWAP is the same for whatever time frame you're doing because the way it's calculated. And by the way, if anyone doesn't get this, I get it, right? I know it's complicated. I understand. Just if you Google or go on ChatGPT and say, how is VWAP calculated and try and get one that explains it in sort of simple terms, you'll see that it just takes all the volume and all. Imagine, right? Okay, hopefully, maybe I can explain this. And apologies for not being clearer on this one. So let's imagine you've got 5 1 minute candles, right? Same as a 5 minute candle. And you've got all these volume bars here. The sum of those volumes on the 1 minute is going to equal the 5 minute candle volume. We agree on that because that's pretty much what happens, right? So the volume is going to be the same there. Now, the only difference you have is when you use a VWAP to calculate the price. When you use a 1 minute, it's going to calculate 1 minute, 1 minute, 1 minute, 1 minute, and move the price relative to volume. The 5 minute is going to take either the close or the average. There's not going to be much in that unless it's been some sort of crazy move. And especially when you start extrapolating that over hours, you're going to get the same reading. So it doesn't matter too much. The only thing that matters really is going to be your trigger, Vinit, because your trigger, you might not want to take the noise on a 1 or 2 minute. If a candle just comes and just tags out a VWAP and rips back up, you might be like, no. I want to see a 5 minute close below it, then come back up. Then I'm going to take the trade. I'm going to bracket my stop under that low, and I'm going to see if I can get an extension back up to prior highs. So that would be the only time that it would vary. And that's just the way that the VWAP is kind of calculated. Red one. Butchering your name, pal. What's the difference between VWAP and anchored VWAP? VWAP is anchored at the open, basically. It's just that's just what happens. So the VWAP is always anchored at the opening print. So you think about regular trading hour session. Let's use a stock, for example. I know many people don't trade stocks, but let's use a stock as an example because it's a great kind of way of thinking about it. The bell goes and then NYSE, ding, 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 ding. There's your first print. The VWAP is going to be starting there. So it's basically anchored at the open and it'll run all the way through to the closing bell. And you'll have starts at the open, ends at the close. Next day, it's anchored again at the open. So that's all it is. And an anchored VWAP is you choose where to start the VWAP calculation. So you could start that at the beginning of a month because that's important. After earnings, after Fed, after something important, you place that anchor and you say, right, that's where I believe is important. The open's important, obviously, intraday. But if you're looking for a kind of a bigger move, or as Daniel was saying before, you can anchor at the high or low. But that makes sense. 5 minutes. Okay. Suresh. Hi, Mark. Great to see you. Great to see you on virtually. Anyway, Suresh. Used to be a Traders Mastermind member. Suresh, you should be coming back, sir. You should be coming back and joining us. We are rolling and we're doing good. Do you use stochastic along with VWAP? No, I don't, but I guess that could be a good additional filter. But you're probably going to find that extensions away from the VWAP are going to be oversold anyway. Maybe you could use some sort of divergence criteria. I guess short answer is no, but I think you're okay to explore something with the VWAP. I wouldn't add any more indicators with it, but yeah, it might guide you a little bit. Charles says, thanks for a lot for the answer. No problem, pal. What's your favorite time frame for VWAP? Says Frankie. I just like the 5 minute, generally speaking, intraday, just because I can see what's going on over a couple of day period. 1 minute's a little bit noisy. Three and 5, I think, are good. Suresh says, but Frankie, you know what? That you find what works, what you like to look at. If you're really short-term guy, you like to trade. It could be a guy, I guess, Frankie. Short-term trader, let's say. It doesn't matter really. You just got to pick one, and I would suggest sticking to one. So once you pick your time frame, don't flip-flop around. Maybe you got a couple you look at to kind of get more data in. So you look at your 15, your 5, maybe daily. But I think it's a mistake personally to go kind of 1 and then I'll go a 2 and then a 3 and then a 5 and then I think you stick with one, commit to it, because your brain starts to calibrate to what you see in front of you, and when it does that, you start to see patterns. And you start to say, "I've seen this before, man. I recognize this," because you start to calibrate to the kind of trading day. So pick one and stick to one. Would be my suggestion there. Suresh says, do you use VWAP bands along with VWAP or just VWAP? I just use VWAP, Suresh. Suresh. I could pronounce your name perfectly, and the next time I say it, butcher it. Apologies, sir. I just use VWAP. I do have a tool coded up that actually, if you're a Traders Mastermind member, you can get called Versorium, and that is using bands, and that gives a trigger when the price moves away from the VWAP. So that's kind of something that's an automated way of visualizing it. But that was just to get over the way to automate it. I think if you're a discretionary trader, bands can be misleading, but there's nothing wrong with them, I guess. I'm probably overthinking it. I would start without them, and if you say to yourself, I'm going to use the bands, then maybe come in. The trouble is with bands, right? This is why I'm sort of hesitating and going, oh, it's because they're always there, and the majority of the time, it's no use. You only want to trade the band or the extensions. So it's tagging a band under certain conditions. So someone could code this, right? Bands that disappeared when the VWAP had a certain slope to it. That would be perfect, right? Because when it was flat VWAP, your bands came on and went, ta-da! You can now fade me at highs and lows. And you go, oh, thank you very much. And then when there's an angle there, the bands disappeared and it went, no, 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 don't fade me now, bro. So yeah, that's the only way that's why I'm being a little bit cautious with the bands. All right, let me run through these. I will answer all of your questions, guys. If you have to go, I understand. I understand we've scheduled this in your calendar until 7, but I will get to all these questions. Sorry for out of context, but if I may ask, you may ask, anonymous attendee, what are the best period settings for the 3 EMA, the slow, fast, and smoothing? I think you've got confused there. If you said the best settings for the 3 EMA, traditionally well, do you know what? I don't think there's a right answer for that, because the trouble is when you start smoothing stuff out and you start adding and moving, because basically all you're doing is adding more smoothing onto an already smooth price, right? Moving average is a smooth price, effectively, isn't it? Because that's what you're doing is smoothing out the kind of oscillations. You're saying, I just want the average. Give me the average, update it every 5 minutes or whatever. And then you're adding extra layers on, and some platforms do offer these extra things. You just start going so far removed from price. I think you lose the value of it. I would stick to if it was me and you want to trade with a 3-period exponential moving average, I would just use a 3-period exponential moving average, or even better, a three people. We're trading people there. A 3-period simple moving average. 3 is going to be well noisy though, man. 5 is probably the lowest I would go personally. But if you're asking for specific things on indicators, I just like to steer away from that, pal. I like to just keep as raw a price as possible. If I must use an indicator to guide me, I don't want it to be multiple iterations away from price, because you lose a lot of context. And I really want to make sure I don't lose that context. I need to feel that price, man. I need to know what that price is doing. And the more stuff I have on my chart, the more further removed I am, the more I lose what people are feeling, who's hurting, who cares. Like NASDAQ now, who cares? Nobody was sitting there in rubbishy range doing absolutely nothing. Someone will probably care on Friday when NFP comes out, and I don't want to lose that. So I've gone off tangent, but that makes sense. Gary says, not a question, but thank you for covering the topic. You're welcome, Gary. I do like a bit of VWAP stuff. I'm pleased that you enjoy it too. So Karim says, which are the best trading instruments working with the VWAP? That's a great question, Karim. And maybe another thing I probably should have included, but that's what you guys are here for, right? That's why we do them live, because you fire these questions, and I can tell by the questions that actually this is resonating, and that's good. And that's good. Okay. Best trading instrument, I think the US indices, they're very, very good. The DAX as well. I don't trade that too much, but I do know traders who may be on this call or watching this who trade the DAX with the VWAP very well. What else would I say with that? The US equities as well. Forex, yes, but just remember that you are having, you do have a kind of approximation for volume there. But like I said, I do think that Pepperstone has the best volume when you're putting on TradingView, different for different chart platforms, of course. So that's covered pretty much. You know what? I guess I could sit. I'm going to list off every damn market that's available. Pretty much all the markets, Karim. Right? Pretty much all the markets. Yes, we mentioned about the slight discrepancy with the volume on Forex, but any market. If I had to pick the regular trading hours session on the Nasdaq ES or NQ or Nasdaq, Did I say Nasdaq? Dow. The three big boys, sorry, Russell as well in the US. They would be my favorites. I think it works well on that. And you anchor it to the open and you go from open to close. If someone's holding a gun to my head. Adrian says, excuse me. Adrian says, can you use a scanner to find VWAP trends? I guess you could, Adrian. I guess you could. I don't know if TradingView allows you to scan for distance from VWAP. But I guess you could. I don't know of one. If you know of one, let me know. I'd be interested to know myself. Anonymous says, thanks a lot for the presentation. Do you think these strategies can be fully automated? Yes, I think they can with automation. And I'll tell you a little story. Like something I'm really doing a lot this year, focusing on, is to try to get my discretionary head into some sort of automated system. It's tough, but what I've discovered, I'm not going to go for. Maybe we'll do a kind of a whole topic on this. But short answer is, I've found that you can get a lot of the way there. You get 80% of the way there with automation, and not worry about the last 20% that's normally discretionary ability. It does change the value. It does change the alpha generated. It changes a lot of stuff, but I think it's good enough for most. So these strategies, yeah, could be automated, and you could probably quite easily say, hey, if this market looks like this and the VWAP is flat, look at this, do this. I probably think you could get away with that. Pedram has said, does it matter? Thank you, Anonymous. Pedram said, does it matter what time frame the anchor VWAP and is matter which is validated? So I think you're saying, does it matter which time frame chart you're using the anchored VWAP? No, you just anchor it on whatever you want to see. 60-minute, I think, is a good place to start. 60-minute chart, you can see a lot of data from that. You can zoom it right in. You can switch from candles to bars if you need to see more days. Bang, you're away. LJ says, what setting for the VWAP? Just the default, pal. It's just VWAP is VWAP, right? There's no. I know people are asking these settings, and I know why, because there are some indicators out there that allow you to change stuff, and they're not true VWAP. True VWAP just is the price and the volume, and that's what we're looking at, because that's what institutions are looking at. When we start mucking about with changing things and tweaking, we're away from the whole point initially, which is we believe that institutions are looking at the VWAP, right? So you want to use a bog standard volume weighted average price, get it from the default of TradingView if you're on TradingView LJ or whatever chart platform you're on. And if there's anything that's got all these other different settings of this and that and the other, you don't want it. You want the basic. I want the VWAP. I just want to know what their VWAP is, because I know, and I believe, I don't know, but that's what all the algos are looking at. That's what institutions are looking at. Jacob says, thank you for a great webinar, Mark. Appreciate your feedback, pal. And Friedlander says, is there a recording of this webinar? Yes, there is a recording of the webinar, and it will be sent out to you as a attendee of the webinar. You'll get access to recording. The Pepperstone are pretty good. You'll probably get that tomorrow at some point if you've missed part of it. Thank you so much, ladies and gents. I enjoyed this one, and I'm glad that you did too. Which we're back in a couple of weeks with a different topic. I forgot what we're doing now. We're going to do another thing very, very interesting. If you find value from this, then please join me again in a couple of weeks' time. Phew, good trading to you. Keep the risk managed. Let's go see what the markets have for us this afternoon. Take care, guys. Bye-bye.